Hi everyone, my name is Doug Campbell with Hit and Run Candlesticks and Right Way Options. And I wanted to take a few minutes today to share with you one of my favorite chart patterns and one that I think can be very helpful to a lot of folks if you learn how to use it. And I call it the pop out of the box pattern. And just real quickly, Hit and Run Candlesticks and Right Way Options, we are a service that really believes that education is critical to you achieving success. And we spend most of our time helping other traders improve their trading results and working with them to get better and better each and every day as a trader. So if there's anything that we can ever do for you, please feel free to stop by, ask us a question. We'd love to talk with you. So first, just a little bit about me. I've been trading for about 27 years, but like most people, that trading was a lot of struggle. I was challenged by it, just like most everyone is in trading. And it was only about 12 years ago when I was able to finally reach my dream of becoming a full-time trader. And currently I run the Right Way Options trading service through Hit and Run Candlesticks. But today what I wanted to talk about is just a little bit about where I came up with this pattern, how I came up with this pattern of pop out of the box. Now, first thing you need to know about me is I'm really a dedicated student of price. I personally believe that price action trumps any and all indicators, any and all scans. Learning to read price action is one of the most important things in trading. And I use a chart that's very, very simple. In fact, I call it a naked chart, where I don't use really any indicators on the chart to get me in and out of trades. I'm very, very proficient at support and resistance and following a trend, and I think that's very important. If you learn how to do some of the basics of charting, the rest of it kind of falls in place. I follow price rather than predict price, and I think that's a key concept that has helped me cross over into being successful, as I gave up that whole idea years ago of predicting, or that I could predict price. So I don't rush to trades anymore. I make trades come to me, and I'm only really interested in stocks that are proving that they want to move in a direction that I want to trade with them. So here's the pattern. It's called a pop out of the box pattern, and really very simple pattern. It's a tight consolidation, generally with dojis, spinning top candle patterns within a trend, where you can really place a box right around it, and it shows you the upper part of that range and the lower part of that range. It gives you good potential entries with low risk into a trade. So I've got just a few charts here to show you some examples, and you can see it works in uptrends here in GILD in January of 2015. A beautiful pop out of the box pattern that was easy to get into. Follow that up, and then more pop out of the box patterns for downtrending in that same stock just shortly later. This chart here on Baxter, you can see very, very tight consolidations, and the pattern requires a minimum of 4 days in a tight consolidation, but it can be many, many more days, and you can see several two really easy to enter patterns here, both very successful trades on Baxter. If you like trading a little bit longer term, this is a weekly chart of ConocoPhillips a while back. Trades that I actually made in ConocoPhillips. There's a 9-week downtrend at the end of 2014, and then starting in 2013. At the end of 2014, there was a 13-week uptrend, and you can see then followed by another downtrend. And these patterns, even though this is an older chart, they're always showing up, and I'll show you some examples of more current charts here soon. This is a chart that's happening right now in Adobe, and you can see since 2017, Adobe broke out there in January, broke its downtrend, got above a resistance point, and then consolidated. And that's where you're going to find a lot of these pop out of the box type patterns, is right around price support or price resistance. And you can see it consolidated there, made a real easy entry into that trade. And you can see it's provided the same opportunity many times over the course of this year, just over and over and over as that stock has moved up. Another low risk trade that we actually made in the Right Way Options trading service was here in Amgen. And you can see where Amgen gapped up on earnings here in February, and gapped up on earnings and then consolidated in a very, very tight pattern. And we bought the pop out of the box as soon as the stock popped, and we used that an option trade to do that. And this trade on its own was multiple thousands of profits for me personally. Just that one simple trade, easy to manage. And if you notice back over there in October, there's actually in the very same price range, there was a pop out of the box down that would have also been a very profitable trade. Here's a simple trade in Allstate. You can see multiple pop out of the box type patterns setting up, and it helps me. Sometimes it's difficult in getting into a trend. A stock that's already trending, it can be a little bit difficult sometimes to enter that trend. The pop out of the box pattern makes that easy, helps you confidently enter that trend and stay with a trending stock. And it even works very, very well on indexes. And you can see here in the diamonds, shortly after the election, we popped up strongly, and then we consolidated, for several days. And just a really nice tight box was formed, and then pop and rally out of there. We formed another one right there in December, and then popped out of that box and traded up. And even through mid-December all the way through the first part of February, where we consolidated in a very tight pattern there, that really is just a long-term pop out of the box pattern in those support and resistance, giving us the upper range, the lower range. And when it broke the top, very clear indicator that we were going to go higher, and you could just follow that trade up. Now, I'm a big believer of trading without indicators, or very, very few indicators, but you can use some very simple indicators for the pop out of the box pattern. And I would really recommend you keep those to a minimum so that you don't have a lot going on your chart, because an indicator can really draw your eye away from the price pattern and mask that pattern where you just don't even see it. Here's a current chart in Massimo, and you can see again around mid-November, Massimo breaks out and then consolidates for almost a month. Just goes sideways there, right on top of that price support. And it's the break of that box for the entry, and you can see it's provided multiple opportunities into that trade over the course of this year, and just keeps going. So you never have to feel rushed to get into a trade. You can let the trade come to you. You can plan for the trade. You can watch and wait and enter that trade confidently. Now, the reason I'm showing you this is I'm putting together a pop out of the box workshop for May 18th. And it'll be at 8 p.m. Eastern, and we only have so many seats available. But if this pattern is something you would like to add to your trading, something that could be this simple, and one thing I wanted to mention is this is a great pattern for those who are busy, who can't watch the market during the day. A great pattern for those kind of folks, because it's easy to enter. We can wait for it to come to us. But if you're interested in this, please register below. And everyone who does register, you're going to get a copy of the class. You're going to video. You're also going to get a copy of my pop out of the box ebook and anything else that comes along with the program. So please register below, and I hope to see you there on May 18th. Take care, everyone. Talk to you soon.